So Alan, Transfix announced today that they got acquired by NFI. This is sort of an interesting sort of development in the freight economy, in the freight tech economy, because this is one of the sort of stewards of that industry in the sort of early high venture valuation that has not lived up to its promise. What are you seeing? Like, what is up with freight tech?
Yeah, it's funny. The topic here today is what's going to be happening in the future, with freight tech, and I was going to come out and say it's digital brokerage, right? I think the digital guys, the Convoys, the Uber Freights, the Transfixes really, their thesis was wrong, right? And it's kind of back to the future, and I think that when companies fail, in a new innovation, still a lot of good comes from it, right? I mean, I think that brokerage was pretty sleepy until the digital brokers kind of came on the scene, and there is a tremendous amount of opportunity to leverage technology to create a better experience for your shippers, for your carriers, as well as make things more efficient.
The promise that those guys had when they first sort of started out, and you've been around, I mean, if you sort of think back to how you sort of got into truck brokerage, or at least became familiar with it, was through the acquisition of Coyote. We had Bill, the president of UPS's supply chain organization, here the other day. And it was interesting, sort of his take on Coyote. He didn't want to talk about anything about it. They've been public about the fact that they're evaluating opportunities. Do you consider that transaction a success or a failure?
That's a great question. I think that when we acquired Coyote, back in 2015, they were certainly one of three leading brokers at the time, right? You had CH, obviously, and you had TQL, and you had Coyote, and CH was obviously a behemoth, and Coyote and TQL were about $2 billion in revenue, and our thesis was one of synergy, right? Really, when you kind of think about digital brokers, my theory on it was, hey, we can reinvent, and we can take what kind of Bill talked about yesterday. Take different modes and create solutions for customers that are better than the sum of the parts. And a couple of examples there. One of the examples that worked was UPS. Unbeknownst to us, because we never really tracked it centrally, and everyone knows UPS. Most of our fleet is run by employees, not by contractors or external carriers. But UPS, as big as it is, it purchased back then in 2015 $1 billion of purchased transportation, domestic, tractor trailers, dry van, and we weren't very good at it, right? And Coyote was really good at it because that's what they woke up in the morning and went to bed at night with. So, we had somewhere between 5 and 10% savings that we got from just leveraging their pricing and costing, data and models. But the bigger synergies that weren't realized, one, for example, is, UPS has one of the biggest private fleets of tractor trailers in the country. And we did a study on it, and about 25% of those trailers going up and down the road are empty. And, Coyote had a private fleet program where they had, I think, about, if I recall, somewhere between 300 and 500 loads a day, where they were working with companies like Walgreens and Walmart and filling up their private fleets. And that was one of the areas that we ran into kind of internal, real challenges, and then some, that were challenges that were, more about, strategy and what we really wanted to accomplish. And was Coyote the tail wagging the dog, so to speak, in terms of the U.S. domestic, parcel network and some of our other networks.
So why wasn't that ever, I mean, in your perspective, why did that never work? Like, why couldn't they not execute on that?
Again, we did it at small scale, right? And I would say that, it's still happening in the industry, right? But at small scale. I don't think anybody, out there in the brokerage world, is kind of leading with that solution, right? And so I still think that's that's an opportunity. But some of the interesting things we found out, when I look back, on my career, UPS Parcel is the unlogistics network, right? Because we built it purpose-built for what we did. So all of our tractors, or I shouldn't say all of them, but most of them are light-duty tractors, right? A UPS trailer never weighs out, right? It always cubes out because, that's, just the nature of parcel. Our tractor trailer drivers, they all came from within, or mostly from within, right? So they came from driving delivery vehicles, and we trained them how to be tractor trailer drivers. None or most of our tractors didn't have sliding fifth wheels. The tandems in the trailers, and by the way, many of our tractor trailer drivers didn't know what a sliding fifth was. They didn't know what the tandem was, in the sliding tandem in a trailer, and most of them were rusted shut, right? Because we never had to use them, right? So there was going to have to be a fleet renewal, right? And we were on that track. We a few years before, we started, looking at, technology and, our assets, our buildings, and start saying, hey, should we be more using things that are off the shelf, right? And but we weren't there yet. So, for that and a number of other reasons, it was really challenging to get that off the ground.
The story around Freight Tech, you started this conversation saying they haven't lived up to their promise in terms of the Freight Tech players. What do you mean by that? So the the brokerage theory, everybody says, hey, I've got 80,000 carriers, right? And we all have the same 80,000 carriers, right? The theory that a lot of brokers espouse, the big ones, and then the digital brokers really wanted to deliver on. One of those tenets was, hey, if we can keep carriers busier and have less empty miles for them, they'll work at a lower rate per loaded mile because their gross, with their empties, they'll be making more money. And therefore, I can charge my shippers less, and I can also put more in my pocket, right? That's the theory, right? Now, Robinson has more volume than anybody, right? And they've only been able to take it so far, right? And the ability to really do that with the size of, this network that we, the whole network, and any one broker to be able to do that at scale has really not, been delivered, right? And I think that's that and being able to digitize all the the processes that a broker does are two of the areas that have yet to really come to fruition. You and I met in Atlanta. I came over to your Sandy Springs office. I was part of Engage, which was an accelerator, when FreightWaves started. And in our cohort, there was a digital broker that was backed by Engage. And I remember sitting in this meeting, and there was a young founder that had very little experience. I remember him. And he got up and did this presentation about his network. And he said, we have 1.2 million carriers in the network. And I was like, what the hell is he talking about? And you actually called him out and really challenged the fact that this was a made up number. And after that, I pulled him aside. He was very offended by this, by the way. And I said, you shouldn't go around telling people that you have 1 million carriers. is impossible. There aren't a million carriers. It's like, oh, we do. But it strikes me that a couple years ago, that's what these digital brokers were bragging about, was their network. I have 80,000 carriers, 100,000 carriers. It never made any sense to me because we all know that's a meaningless number at the end of the day. Effectively, if you have Truck Stop or DAT, we all have, you practically have every carrier in the country at that point. So it was always a meaningless stat. You called it out. But it struck me that what really matters isn't the number of carriers, but rather the amount of freight volume that moves through your network or the amount of shippers that are actually consistently giving you freight.
Right.
Where have they failed, not on the sort of capacity side, but why were they not successful building out these networks from a shipper's perspective that enable them to be profitable?
Look, first of all, I think that the area that the brokers play in, again, whether you're a digital broker or a hybrid broker or whatever you call yourself, and you know over at the AVC Summit, you kind of alluded to this, that the OTR, the over-the-road business that's out there, even from big shippers, a lot of it is very inconsistent, right? And so it's very tough. And that inconsistency, is there's so many different variables that make up that inconsistency. Not just that the guy doesn't have a load every day, right? It's you find another load that's okay going to that same city pair, but that's just the start of it.
A lot of it's one direction.
Yeah, right. So the comment you made at that summit was that the barriers to entry for the small guy, the one truck guy or gal, to compete against a carrier with a lot of trucks is level, right? Because and they may have a better shot at it because the bigger carrier is trying to run a network, some sort of semblance of a network. So he's going to be a little bit more choosy about what he takes, right? And so, the market, the truckload over-the-road market is very, very inconsistent. When you think about, the contract work and, the rejection rates, right? If it was consistent, the carrier that was number one on the contract would be taking it every day, right? If it was really consistent. But, X% of the time he says, no, it's not good for me today. Right? And a lot of times it's not necessarily the rate, right? It's I don't have a truck there, or that's not going to fit with what I'm doing.
Or Walmart called my largest customer.
Right. So that's a great example of what really happens out there, even in quote unquote consistent contract freight.
Yeah, I mean the only true consistent freight is the dedicated contract services that are the largest asset carriers have, the Warners and the J.B. Hunts, where that's a
they're running a private fleet.
They're running a private fleets, white labeled. It's a amortization schedule. They're effectively leasing drivers and trucks and stuff.
And by the way, those guys are trying to do the same thing. They negotiate in those deals. Hey, we'd like to be able to fill those empties because a lot of it's one way, and we'll share that back with our shipper.
Yeah.
Right. But the reality is, there's some of it. And look, there's an anecdotal story everywhere where, hey, we found some freight that's going the other way that's pretty consistent, and it's kind of helping, reduce the cost per mile, right? But it's not big enough.
Yeah, I mean, one of the things that strikes me that isn't talked about enough, and frankly, we don't talk about it enough, is the growth of the private fleet that happened during COVID. Is a lot of the additional capacity is sort of invisible because it is private fleets, and those private fleet operators, in a quest to sort of secure their supply chains, ended up really growing. That's what has kept the OEMs alive, and they're taking a lot of freight from the open market and that's creating this sort of excess amount of capacity. Unfortunately, there's not great data on it,
right?
Because you don't know how many of those private fleets are available at any moment in time. But to your point, it is hard to digitize this industry because of all of the inconsistencies in lane flow and product types and just all the things that take place in the industry. One of the things that you did, which was really interesting, is a couple years ago, you guys started a SPAC, which for those that don't know is a Wall Street vehicle that essentially is a shell company and you're trying to find an asset target. And you ran this SPAC with the idea that you were going to essentially acquire or merge with an operating company in freight tech. You guys didn't, that was not successful, that journey. But I would love to hear the story of the journey and what happened, and frankly, what you saw along that journey.
Yeah.
And it was called LIT, by the way.
Yeah.
Anyone who knows Jake Medwell is an ideal.
He named it Logistics Innovation Technologies. So, you know, Craig talked a little bit about a SPAC. It's special purpose acquisition company, right? And we were able to raise $400 million. The $400 million sits in a trust, and then it was our job to go find a company that was, you know, public company ready, that fit our strategy of, you know, being in the logistics technology sector, which is a very kind of, you know, broad umbrella, you know, intentionally. And then, you know, obviously that company would get the $400 million, you know, for their growth strategy, and then also integrate into us and become a public entity. Well, you know, we couldn't have probably gotten into the SPAC market at a less opportune time. I mean, the SPAC market is a tougher market, you know, than the IPO market, and the IPO market was very down. We needed to find a company also that was really at least about, you know, that really was legitimately worth about $2 billion or more, because, you know, we were going to dilute, you know, the merger was going to dilute the shareholders, and so you needed to be a certain size to find a partner that was willing to do it with you. You know, Transfix is a great example, right? They had a failed SPAC, not with us,
yeah.
but their SPAC failed, you know, kind of for many of the reasons. But that all being said, you know, the experience was tremendous, because, you know, myself and, you know, my partners over at 8VC, which, you know, they're an investor in FreightWaves,
yeah.
right? You know, we actually looked at about 100 different, you know, freight tech companies, and you know, we learned a whole lot, but we couldn't find the right opportunity that made sense. And you know, the way SPACs work is that the economics can be very lucrative to the SPAC sponsors, right? Because you get your shares, you know, very inexpensively. But the folks that invested in the trust, that put the $400 million in, you know, it was our job, fiduciary, to make sure they got a return. And most of the companies that entered into SPACs and what you call de-SPAC are trading way below what they were trading at as a SPAC. And just for easy use, $400 million, there were 40 million shares. All SPACs trade at $10, and they're trading on the cash value of their entity, and so there are very few SPACs that have de-SPACed that are trading anywhere close to 10, except for a couple. One is DJT, Donald J. Trump SPAC, which is more of a meme.
It's like a
SPAC.
$10 billion.
The economics of that company don't
it's like $4 million in revenue for $10 billion market cap.
Yeah, right. Yeah. So you know, look, we learned a ton. We could not find a target that met the criteria to make it a good investment for our shareholders.
You know, frankly, it is disappointing, because I think you guys had the right pedigree. You had 8VC, which is the largest venture investor in the space. Incredible roster of companies, very successful companies, but also a lot of advisors that are involved in that fund. You have an enormous pedigree. So it wasn't as if one of the SPAC problems is these are folks that know nothing about the industries they're investing in. In fact, we got an unsolicited offer for a SPAC, and I said, this was at some point, and maybe 2 years ago, and I said, sure, send over the term sheet. Like, I had one call with them, and they're like, hey, we want to offer you, I think it was $100 million or something. I was like, send it over. I didn't take it very serious. And on the term sheet, like, they literally wrote FreightWaves is an innovator in home security, and it was like all this stuff. And I'm like, they took somebody else's, they had issued a term sheet to someone other organization and ripped off the name and sent it over. And I'm like, this is a bunch of clowns doing this stuff.
Yeah.
You're not a clown.
There were a lot of bad actors that gave SPACs the actual vehicle. The vehicle's a good vehicle, right? If it's used properly. But there have been well over 100 liquidations like ours, and the ones that actually de-SPACed. My son actually has a kind of financial database that tracks all this stuff, and they're trading well below. A good example, one of the companies in the logistics industry, log tech, that de-SPACed is Freightos. And look, Freightos is a good company, right? I mean they have a good value proposition. They're growing, but again, they went out at 10. They're trading somewhere between $2 and $3 today. So the investors that got in at 10, lost 70 to 80% of their investment, and now they're a public company, and maybe it's a good investment at 2, right, or 250. I don't know, right? But we weren't gonna do that.
It was an interesting thing, because like Trevor Milton at Nikola really turned the whole SPAC thing on its head, and that attracted so many different people to get into it. Because I remember that at one point his stock was trading at like 60 billion. He was worth more than a Ford Motor Company, $60 billion, Nikola. And I had actually been introduced to Trevor Milton in 2017. And had gotten the deck, and he was raising money, and I sent it over to a high net worth individual that helped seed FreightWaves, David Hunt, and he had the opportunity to invest at a $60 million valuation. So when this thing's going at 60 billion, he texts me, he's like, man, I missed out on that one. And I'm like, you should have invested at the time. But ultimately, Trevor is now serving prison time because he committed flat out fraud. And I think that was the issue, is that there was so much happening that, the legitimate players got caught up with a lot of the fraudsters, and ultimately everyone is sort of worried about fraud. But when you were on that journey and you were talking to a lot of these startups, what were the things that you saw in terms of business models that were working and ones that weren't?
There was a lot, that was working. The question for us was, we needed to find something that had a legitimate valuation, really, over $2 billion, right? So there wasn't a lot of that out there, right? But Freightos was a good example. I mean, they had, a legitimate business model, right? And they were growing, and they were, they found a void in the marketplace that, they were creating value. There were. I just want to go back for a second to, the EVs, right? Or, the EVs and the autonomous, right? That's, my son was like a bit of a day trader, and he was trading on all these, EV stocks and autonomous stocks because they were going crazy. And that's how he found out they were SPACs. He didn't know they were SPACs. He thought they had IPO'd like everything else. But back to your question there, I'm just, we looked at a lot of, interesting business models. It's, in the visibility space, in the helping companies, with their efficiency. And obviously there were the digital broker, other digital brokers out there. But either it wasn't, what we thought was a model that could really fulfill what they said they were going to be able to do in the time frame they were going to do it, or it just didn't have the valuation that we were looking for. Yeah, and it was hard because some of the businesses, it's interesting in freight tech, is like you have these super highly valued, at the sort of upper end of the market. Project 44 is an example of that. Right. And so you have this sort of $3-4 billion company on sort of one extreme. And then you have a lot of really early stage companies. That middle has always been challenging. Like you've had the breakout companies, and then you've had the ones that frankly are middle market. They weren't probably ready to be public companies. Right. But you guys were you wanted a $2 billion company. It's a pretty large company in terms of value. Yeah, and so And what's interesting is we know that in the private markets, valuation can work a little differently, right? And you could be an early stage company with a great idea that folks know is going to go, so you get a high valuation, right? But the public market is very impatient. So one of the other challenges we had was, if we were going to take a company out that had very little revenue and basically, no profit, we were asking the public market to value it on a multiple of this very small revenue, right? And they may tolerate that for a quarter or two. And I think that's what happened to a lot of the autonomous companies, right? They went out there, they had very little revenue. They had obviously huge losses, right? They didn't have any EBITDA. And then the next quarter, it was kind of the same. Well, we're doing a pilot, right? And look, I'm bullish on autonomy. It's just going to take a while, right? And so, some of the work that these companies did, whether they went public via SPAC or still private, is amazing, right? But they're not ready for prime time.
I mean, it is amazing to me, because you mentioned autonomy and EV, is you had Nikola, prison, dudes in prison. Yeah. You had Too Simple, arguably the most successful autonomous company in terms of technology, that basically got into a CFIUS issue for stealing intellectual property to China. A bunch of board dynamics and founder dynamics. One founder fired the other founder, and then he came back. Right. Just a zoo. These companies weren't ready, and I think they really skunked the entire market. And it's probably fair to say venture capital, a lot of these companies should stay private, because VCs at least, they understand what risks they're signing up for. And they have a model that works for them versus retail investors. I had so many people who would ask me my opinion that knew nothing about freight, that would say, this company, Highland's going public, how do you think about it? And I'm like, we don't know yet. This technology is unproven, their business model is unproven, we're going to see it. But they sort of got onto the hype train because all the stuff sounded sexy and they were thinking this is the next Tesla.
Yeah, I mean, autonomous, I think it's the same story with, robotics and logistics. Right? I mean, there's some great companies out there, but they're really not ready for prime time. Yeah. For the most part.
Fast Radius was an investment at UPS.
Yes, right. 3D printing.
They were in Engage, and, right. It was us and Fast Radius were the top.
They SPAC'd.
They SPAC'd, and they went bankrupt 8 months later. Like $1 billion valuation, zero 8 months later.
So yeah, I mean, but look, I mean, I think, just transitioning here to the future. There's a lot of good things going on in freight tech, and I think one of them is the application of AI. And I was thinking back, how obviously truckload and brokerage and even being an asset carrier and forwarding are very paper intensive processes still. And obviously, there's a lot of OCR going on, but the ability, for AI to, through NLP to read the information off of all that paperwork and then match it up to, your version of the truth in your TMS or in your systems, and to either, automate it totally with no human touch, or, automate it to where the human touch is light, is huge. Right? Because, there's a lot of cost there, and there's a lot of inefficiency and a lot of working capital, tied up in that. And I was thinking about it years ago. UPS is a customs broker, not, well, they're a truckload broker now, right? But we're we're one of the largest customs brokers in the world, and Canada is one of our bigger operations. And I was president of UPS Canada. Every customs document, the commercial invoice and, the NAFTA, all the stuff, everything has to be saved for 7 years, okay? So in our building, we would fill up 1 4-drawer file cabinet every day, times 250 work days a year, times 7 years. So we had like 1,800 file cabinets, and every day, one would get emptied, the oldest one, and we would fill the other one up.
Jeez.
right? And that's how big our business was. And that's how many commercial invoices from our importers, you know, went in there. And this is years ago, before NLP and AI, but, you know, someone invented imaging, right? And so now we were imaging at origin all these commercial invoices at origin, not at destination. So the importer, the customs broker, us, as soon as the wheels went up of the plane, we were able to start brokering that because we had the image and we'd have, you know, our version of the truth and then, you know, the customers, and we would start, you know, the customs brokerage process. And by the time the plane landed, we would have the shipment cleared versus getting the paperwork, you know, at destination. Plus, you know, so our people got more efficient, and every day we threw away one 4-drawer file cabinet, and before you knew it, we had this open warehouse with no, you know, file cabinets with a couple of pool tables and ping pong tables, and you know, because we had a long lease, right? But I mean, I think that kind of demonstrates in a more physical way, you know, the power of what's going to happen with AI, right? And its ability to even take things to the next level, because now, you know, we're going to be reading that information off of that and matching things beforehand, and then letting the human deal with the exceptions.
Yeah, it can just, in many ways, it's just a really sophisticated search engine for information. Well, Alan, appreciate your time. Unfortunately, we're out. It is time for lunch, so appreciate everything. We'll have you back to talk about a continuation of this journey, Freight Tech.
Okay.
I know you're involved with 8VC, and you're seeing a lot of activity, so excited to continue that conversation.
Great. Thanks, Craig.
Appreciate it.